Hi everyone, today we are going to discuss about 11th standard accountancy, unit 12, final accounts part 1, exercise sum number 1. Prepare the trading accounts in the books of Mr. Sanjay for the year ended 31st December 2017. The information are given here, let's read. Opening stock 570, sales 26,200, sales returns 60 rupees, purchases 15,600, purchases returns 90 rupees, closing stock 860. Okay, what they asked, prepare trading accounts in the books of whose book? Mr. Sanjay. Okay, period is 31st December 2017. So we have to prepare the trading accounts at the year ended 31st December 2017. Whose book? Mr. Sanjay book. Okay. Just recall it. What's the format of the trading account? The heading of the trading accounts contains the word for the year ended. We have given the period. We have to enter that period here. Okay. Like ledger, trading accounts also two sides. Okay. Debtor side and creditor side. Debtor side we have 3 columns. Creditor side we have 3 columns. Particulars, rupees, inner amount column and outer amount column on both the sides. Okay, what are the items are shown or appears on the debit side of the trading accounts? First, always we started with opening stock. We always started with the word to. Okay, so opening stock, purchases. If they given purchases return, we have to subtract purchases return from purchases and we get net purchases. Okay, listen, if they given purchases return, you have to enter the purchases amount on inner amount column, and after small calculation, that means after minus purchases return from purchases, you have to enter the net purchases into the outer amount column. Then direct expenses. What are the items are called direct expenses? Carriage inward or freight inwards, wages, dock charges, octroi, royalty, import duties. Okay, these are called direct expenses, which means when you purchase goods, that purchased goods you have to carry, you have to bring that purchased goods into the business premises or godown. Okay, that cost you have to enter into the debit side of the trading account, that is called direct expenses. And to cost of goods manufactured, what are the items we called as cost of goods manufactured? The examples are given here. The cost of the goods manufactured, that is raw materials, coal, gas, fuel, water, power, factory rent, packaging, factory lighting, royalty on manufactured goods. So these and all items are called cost of goods manufactured, is to be entered into the debit side of the trading account. And what are the items shown on the credit side of the trading account? Sales. If you have sales return, you have to enter the sales amount on inner amount column, and sales return also you have to enter inner amount column. After subtract the sales return from the sales, you have to enter the net sales on the outer amount column. Okay, then closing stock. These two items only appear on the credit side of the trading account, that means sales and closing stock, these two items. Okay, and then the difference between the totals of the two sides of the trading accounts indicates either gross profit or gross loss. Okay, if the total of the credit side is more, the difference represents gross profit. On the other hand, if the total of the debit side is higher, the difference represents gross loss. Okay, the gross profit or gross loss is transferred to the profit and loss account. This is the format of the trading accounts. Okay, so as per the format of the trading account, first we are going to start it always with the debit side. Okay, the item is opening stock. So on debit side of the trading account, you always started with opening stock, always started with the word to. To opening stock, rupees 570, you have to enter into outer amount column. After opening stock, you have to enter purchases account. Okay, so purchases rupees 15,800. Listen, if they given purchases, you have to check whether they have given purchases returns or given or not. Okay, yes, here they given purchases return. So for that you have to enter purchases amount 15,800 in inner amount column, because you have the small calculation with purchases return and purchases. Then you have to write purchases return amount 90. So you have to subtract purchases return from the purchases. So you have to write less purchases returns 90 rupees, enter inner amount column. Then you have to subtract 90 from 15,800. You got 15,710. You have to enter. This is the 15,710 is the net purchases. Okay. Enter outer amount column. We entered. Then opening stock entered and purchases entered. Purchases return also entered. Then sales, how much rupees? 26,200. Whenever you see sales, whether they have given sales return or not, they have given sales returns. How much rupees? 60 rupees. So you have to enter on credit side sales rupees 26,200 inner amount column. So on credit side you always started with the word buy. Buy sales rupees 26,200 is to be entered inner amount column, because you have to subtract sales return from the sales only. You have to enter sales inner amount column. Okay, what's the amount of sales returns? 60 rupees. So you have to subtract sales return from sales. So you have to write less sales return 60 rupees is to be entered inner amount column. Then you have to subtract 60 from 26,200. You got 26,140. This is the net sales. You have to is to be entered outer amount column. We entered. Okay, so sales and sales return entered. Then we have closing stock. How much rupees? 860 rupees. Closing stock is always on credit side of the trading account. Buy closing stocks. Listen, on debit side we started with opening stock. Okay, on credit side we closed with closing stock. We ended with closing stock, right? So buy closing stock 860 rupees entered. Then we have to find the total. So for that, which side we have higher value? So credit side we have the higher value 26,140 plus 860. We got 27,000 on credit side. So credit side we have the higher value. So we consider the higher value as the total. So 27,000 we have to enter on both the side as the total. Horizontally we have to enter the same line. Okay, so 27,000 as the total. So which side has the lesser value? Of course debit side has the lesser value. So we have to find the differences like ledger account. So we have to sum up that two values, 570 plus 15,710. We sum up them, then we have to subtract that value into 27,000. We will get 10,720. So this is the gross profit. Listen carefully. Listen, we have the total of the credit side has the higher value, right? So the difference represent gross profit. So against 10,750, against it you have to write two gross profit carry down. That's 10,720 you transfer into the profit and loss account. Okay, do you have any doubt? Please comment it on the comment box. Thank you. Take care.